Hello, everyone. Thank you for attending this evening's presentation on Where is Bitcoin Going Next? In this presentation, Ryan Wildey, host of the cryptocurrency trading service at ElliottWaveTrader.net, will be sharing his latest analysis on Bitcoin and where he believes it's heading. He's also going to sneak in some GBTC for you. I'll be providing a link where you can learn more about Ryan and his cryptocurrency trading service, so keep your eyes out for that in the chat box. But since I believe many of you are already familiar with Ryan, and since we have a lot to cover, we'll jump right into tonight's presentation. So without further ado, please allow me to welcome Ryan Wildey. Ryan, thank you so much for being here.
Thank you, Tom. Welcome, everyone. Thank you for, if you know me and you've seen my talks before, welcome to you again. And if first time hearing me, special welcome to you. So just jumping in, let's see if I can, let's see if it's working here. All right, there we go. Just a quick intro to myself. I actually joined Elliott Wave Trader as a member back in 2015. Just hearing or reading Avi's analysis of the S&P 500 and finding him extremely accurate in making calls. I wanted to learn how to trade better. I wanted to also just rub off on what I was learning from him in his writings on a more daily basis, and became a member in 2015. When we joined the community, I found not only Avi's great analysis, but just a great community of traders, both professional, burgeoning, beginning, everyone running the whole gamut, and was a devoted member. What happened to me was roughly around 2015. I was learning Elliott Wave analysis and posting mainly on Ethereum in the main room, the main market trading room. We had no service for crypto, and eventually Avi asked me to join the team, and that was our talks began in 2017, and we started the service by August 2015 and expanded it to much more, obviously covering the whole market, including Bitcoin. And of course, just in time for the major talk that we had in early 2018. Let's see, I guess I got to click here. There we go. This is just a quick view of the service. What you're seeing here is my posts, but essentially, if you're a member, you can make posts as well. So I don't know, I must post with Tom, what do you think, like 30, 40 times a day? Everything from Bitcoin multiple times a day to GBTC multiple times during when the stock market is open, on and on, Ethereum, etc. Anything that folks request of me, if I can get it, I will post. And then a lot of, general, I do a little bit of trading education and all sorts of other stuff to go with it. Just, quick disclaimers. I'm not going to read this to you, but take this all as educational. I think too, nothing here I'm suggesting to you means that you should take these trades or make these trades. That is really up to you and your own risk quotient. But also, I'm going to emphasize, which isn't written here, that a lot of forecasts, even with Elliott Wave analysis, things change. I will talk about levels in this talk where my opinion may change, and certainly if a lot of you guys have followed me on Twitter a long time, I certainly do change my opinion. But the main thing that I will emphasize is that Elliott Wave gives us a way to measure risks, measure our trade according to those risk levels in a very objective way. So I'm going to talk a little bit about that, so I can change my opinion, but at the same time, this whole analysis style is about finding a reasonable level of risk to take a trade. I'm going to do 5 slides on, just if you've never heard of the Elliott Wave theory, I'm going to give you 5 slides to give you kind of an just to get you up to speed a little bit. This is a remarkable quote, which I don't want to read to you because we want to keep moving on, but this is a remarkable quote by R. Elliott, who invented the whole analysis technique back in he published his paper in 1936. And what's most remarkable about this quote, which forecast a long market run in the U.S. stock market, was that it was made just after the Depression, and by and large, not only was the country just reeling or recovering from economic problems, but also just a sentiment of just a poor sentiment and a difficulty in wanting to kind of get moving, if you read the history books. And so he was forecasting this long run in the U.S. stock market. By and large, this run in the stock market is not yet done. So he was off in suggesting 2012 was the end of this move, but it's still going. So he's a little off in that regard. But this was a phenomenal prediction, if you will, back at a time when the country was really down. Now we've had multiple bear markets since then, but if you if you take your charts, your S&P 500 charts, and you zoom out and look at them in log, you'll notice that all the other bear markets are really tiny compared to this long run after what happened before that run, which is a really an amazing bear market. So all of those little bear markets really get kind of swollen by this long run, or swallowed, I should say, from that long run. So it was amazing. Now, this is the basic Elliott wave structure, and this is what he was seeing. It's that markets move in these 5 waves. So basically, trends take 5 steps forward, and then corrections take 3 steps back. So that's kind of a basic format of the Elliott wave structure. And if you're a very visual person, I was a designer before I joined the team, so naturally a visual person, you step back on a market, you'll see this pattern. If you're a sort of person that can recognize patterns at basic level. I was aware of the Elliott wave theory back when I first started trading as a hobbyist in about 2001, taking trades in gold and gold mining shares mostly back then, a little bit in the stock market. And I could see this pattern, and I read the Elliott wave principle by Proctor and Frost. I could see it, but what I learned on our team, or from our team before joining the team, was how to apply this in a very practical way. So just take a look at your charts, see if you see it. Also, what I want to point out is that give me a cursor here. These are also fractal in nature. So 3 impulsive waves, 1, 3, and 5 make up a trend with 2 correcting waves, 2 and 4 in between, which are also ABC. And then you can see that this entire correction is retraced by an ABC. Further, that same subwave pattern of 1, 2, 3, 4, and 5 also makes up the subwaves of 1, 3, and 5. Another thing is the wave 3 is really what we trade for when you start to learn Elliott wave analysis. It's the longest and the most extensive wave mathematically, and also has the more subdivisions than the other waves in between. So because you tend to see a lot more, so even this 3, for instance, which this is 5 waves, but even like this 3 will subdivide in another 5 waves. So there's a lot to trade within the 3rd wave, but it also tends to move the fastest. So say if you're an option trader, you tend to want to if you're going long premium, you tend to want to catch that 3rd wave. Okay, so that's kind of the nature of the market. And then further, what we learn is sort of the sentiment aspects of these waves. And these are my paraphrases, but there's a tendency, if you imagine the market coming down and you take the first wave up, there tends to be a lot of disbelief in that. Now, if you're a Bitcoin trader, you know that when we came down to 3,000 level and we had that first rally, really hardly anyone believed it. I've had people that had subscribed to my work for 1.5 years, no offense to them, but had really doubted that we had bottomed at 3,000, even though I was suggesting that we had bottomed. So we get a lot of disbelief. And then the first correction, which for Bitcoin, I think it brought us down to, I forget, I think it was down to 3,058 or something like 85 or something like that. I don't remember exactly, but then you have doubt that disbelief turn into a full-blown call for the bear market to resume, and people were looking for that 3,000 to break when we had the first pullback off the first wave. And then when you enter in the 3rd wave, you end up with this chase, and that's when people hit the point of recognition. Oh, this is a bull market, and they all start coming on. And those that got on early are celebrating, but eventually those chasers bring the market to a fully saturated point, and then you enter the wave 4, and then wave 4s tend to chop a lot, and so become very frustrating. They just have more of a chop nature than wave 2s, so they tend to have a lot of high frustration. Both bulls and bears struggle with the trades, and then finally wave 5s, which are very euphoric. If you've been in Bitcoin since 2016 and 17, you know that last wave up into, which was a 5th wave of some degree. I have my opinion about that degree, but it was a 5th wave for sure. And we topped at 2018. There was a lot of euphoria. In fact, I always joke people were just taking me out to lunch. I got lots of free lunches, people wanting to talk Bitcoin, and I told them all sell, or avoid it if you haven't bought into it. So, and then you eventually get into a bear market, and of course the feelings of trapped and false relief when you have false rallies. Those are all very normal feelings within a bear market. So there's a feeling aspect of it. So there's a kind of a sentiment that kind of runs with these waves. Further, there's a mathematical nature. So I'm just going to pop some of the common relationships, and a lot of this is tied to Avi's work. Some of these Fibonacci structures are known to longtime Elliott Wave people, but Avi did a lot of tuning and kind of putting some empirical nature or study behind these mathematical relationships. So for example, wave 2 tends to retrace 0.618 of 1, so it's the golden section. It can go as far as 764, which I often use in Bitcoin, and then sometimes as shallow as 382, but the ideal is 618. Another one is that the wave 3 tends to be 1.618, the length of wave 1 in log. Okay, so another golden section if you're a designer or a mathematician. It's a tendency, not a law, but we have basically a tight range to a lot of these structures that we look for. And I can go on and on. I can go A's to B's and C's to B's, and how deep the 2s are in certain situations versus other situations, and 4s to 3s. I can go on and on and on. And further, what we also see is some special tendencies within special markets. So I kind of have Bitcoin's mathematical tendencies down because that's my main job, right? That's my day-to-day job. So I study Bitcoin from what its Fibonacci tendencies are within each of the subwave patterns, mainly so I can get right on my forecasts and where I'm looking for trades and all of that good stuff. Also, I want to say again, back to the fractal nature, this means that I have an Elliott Wave point of view about Bitcoin, Ether, and a few other large caps that I watch that closely, down from the daily all the way down to even 5-minute charts at times when it's very clear. Gets less clear on small time frames, but it can be used. All right. That's the gist there. Let's see, I'm gonna get out of this and move on to move on to charts. So when we talk about this mathematical nature of Elliott Wave, again, the folks that have been with me, again for 2 years, somewhere here in 2017, we started the service, and Bitcoin had escaped or was escaping this July correction we had, which I think it was right about here. Might have been this one. I don't have my months. Yeah, that's that one right there. Was escaping that, and when we started to rally through the top of that level, we started talking about the top already, actually in early fall. That this was turning into a euphoric top, and we were basically myself and a couple other analysts are helping me get started from the rest of the team, and we were looking at topping areas, and we had called out 14 as a really key area. And of course we ran straight through that, but the next area we were looking for was this 18K to 19K region. And of course that took. Now, when we started to drop, there was still a question, and one of the aspects of this, which I have a long article on the board, is where are we at in the long-term Bitcoin count? And there's a lot of data problems with cryptos early on, and especially with Bitcoin. Some of the main trades in Bitcoin were actually done outside of any known data sort. They're simply published. So I'm running some counts where I use all the seen data, the data that has shown up on exchanges and has candles put out by data sources. And then I have some where I actually work counts off of just published prices and not actually candles exist. So I've got about 3 alts. So one of the questions was this correction in 2018, was it going to be a minor 4th wave correction, and we were going to get another 5th running up to the 30K region, or are we going to get a larger scale? So that was an active question for me and for subscribers and for other analysts that were helping me out at the time, Zach and Garrett, if any of you guys know them. And what we did learn was when we there's a recorded talk of me on Trader Expo where I was looking for this rally in February, perhaps to send us back up to 30,000. But I was really clear in that talk where if we had a certain sort of failure, I was going to be looking into the region, and I'm going to say this very, very clearly. I was looking for this bear market to head into the region between 3,000 and 4,700. And again, or I think I said 4,600 at the time, but depending on data sources, there was a region in that area. 4,700, 4,600 is nothing to Bitcoin. So anyway, 3,000 to 4,700. And again, you can look that talk up if you dive into my, as long as I still have it, at the Money Show, Trader Expo, somewhere. If you find my profile, you should be able to find that video. And so I was still looking for that rally in February, but once it failed, and it was after that talk, it failed shortly, that I was looking into that region. So we had that long grind. I think we watched the April rally. It was a big rally in most of the altcoins, April 2018, to see if it was going to take us out of there, but of course it failed as well. And Bitcoin actually never really participated in that rally. And so again, as you know, if you've been watching Bitcoin, we went down to the lower end of that range, 3,120. But I was actually Charlie Shrem, if you know him, invited me to talk at another Trader Expo that his organization was putting on. And that night was the night we got started this big crash and ran through. And I wasn't looking for a bottom until we hit 4,600 at least. So I got a chance that night to say, look, we're crashing through, but we're gonna get into a key level where I'm looking for a bottom in this market. I would like for it to be at 4,600, but it definitely can extend to 3,000. And if we break 3,000, this bear market is much, much bigger. It would send me into one of my alternate accounts, but we know that it held. It held at 3120 was the low that I use. I usually use the BitMEX swap as my data source nowadays for micro because it's very liquid, and that source held, I think it was 3120. So that's basically showing how the mathematical nature of the Elliott wave structure, when you start to learn it and the way we teach it, can be used to show turn points. Now, believe me, I didn't just sit there catching a hot knife as Bitcoin was coming down to 3,000, but I was looking for the market to respond to that support level and decide to take on trades in that area. When I saw the first little tiny impulse out of that region, we went long. So that means that most of 2019, if subscribers were brave enough to follow that trade, and I know not all of them were, we were in much of the 2019 rally. Now I'm going to say most of 2019 surprised me. One, because I expected a lot more pullback in this region. I'm going to zoom in here for you guys to see this. So bottom of 3,120, and I was looking for much more pullback because typically you see a lot more pullback, but we just saw a very extended rally here. But we also came, and I was most surprised by cutting through the 6,000 region, which a lot of people on Twitter were surprised by a cut through that region. But when we got up into the May region, it's very normal when you have a large bear market like this and you have a main top here that you usually don't rally through much further than the 618 to 764 retrace of that entire bear move. And so I was saying, you know, I really want to see this market stop. We've got extensions, great, but I want to see this market stop by 13,425, ideally, because that's a 764 retrace. Yes, we can extend past that, but that's a really, really important level. And again, the subscribers on the site can remember that. And we went through that, but not far, and we topped at 13,900. All right, so that's just, again, using the mathematical nature of this pattern or this in the structure, this Elliott wave structure. And then on the way down, I mean, this was a very choppy correction. I'm going to move to my more short-term charts. This is a very choppy correction. But what we do know from wave twos, as I said, they ideally retrace 618, but they also hit other key fibs. 382 and 50% are very key areas for wave two's retrace. And so far, we have a hit of the 50%. Just I think it's $100 below, very close hit. So a main Fibonacci off of the wave. I call this a wave one. I don't have all of my labels on this. I'm missing levels. I'm sorry. I'm gonna put some labels in here for you. Somehow they disappeared after starting this. I must have clicked something. Anyway, so the wave two here ended at 50% of the retrace of this 2019 move. Okay. Now, don't know for sure it's going to hold, but we do have what looks like 5 waves off of that low. And when we use our normal Fibonacci projections, you can see it right here. This gives a 5th wave target of 127,000. Okay, so as long as that wave 2 holds at 6,400, I'm projecting a ride to 127. Now that's ideal. The 176.4 is also another key fib. We can hit that, and that is 90,000. and about 89,868 is what my fib is showing, but let's just round it off to 90,000. Also, we can see extensions. We don't see extensions down here. We're not going to be able to plan higher targets, but once we start hitting the third waves, if that extends past the key zone of 72,000 in this third wave, then I have to talk about extensions. The 5 waves we have here is either the first wave of this third wave, or it's the first of the first. The actual ideal hit of the first of this third is 16,000. So I'm looking at the way this is developing. It may be that we have a very low first of a third in this 5 up. So 1, 2, 3, 4, 5, if you can imagine. Or we have just the first of the first, which means 1, 2, 3, 4, 5, and we stop in the 16, 20K. I actually really like the idea that we stop in that 20K region or a little bit lower than that, because when we get a deep wave 2 pullback off of that region, I know that the whole Twitter space is going to be talking about this double top, and a lot of people are going to run for the hills, and that's really going to clear up the market for running through that and getting this nice third wave. So that's a little bit of me predicting the feelings and sentiment of the market in that space. So I'd love to see that, but it may be that we just simply set up from down here and start a run to 70,000. It's completely reasonable. You may think I'm crazy, but we may set up here a slow grind all the way up to that 70,000 region, okay? So we'll see what happens after this pullback, but as we zoom in, let's see, I'm on a micro here. If we zoom in, I don't know if we've topped, but I'm starting to get the technical indication from the various technicals that I use that we may have topped in this 5th wave. We'll see. I need to see a lot more. And one thing I'd like to see is for it to fall out of this channel that I'm tracking here. A break of 8,700 would make it pretty high probability. But it's normal for this, let's see, I think I have it better here. It's normal for this wave 1 to pull back again to even that 764 region, but 618 is ideal, so you guys can see that. It's very normal for this to pull back into this box, which is 82.37 to 7054. What I want to point out is that this is a really, really important trade to take advantage of this Bitcoin run, provided that we continue to hold 6,400. So this is the area where it's sort of the last stop in the train station. In fact, Avi and I have an article that if he held my title, he's putting it out. If he held my title, it's something to that effect. This is these ones of the thirds, the subdivision of the third into the first wave is, and then the 2 pullback is where you get that real final entry before the real strong move. Whether this is the first of the first, as I said earlier, of the third, or really the first of that third, and it's just very low, it doesn't matter, because the third wave of some degree is going to be a really powerful move in general. I mean, the move back here we had, if you guys are familiar, if you guys watch my YouTube channel, I said, I'd like a downside, and I was looking for deeper than this, but I also said there's potential that this can break up, and that certainly we got both. We got the downside and the upside, and I knew once we were through here that we had a very powerful setup. So the folks on Elliott Trader will really be able to capitalize on that. I've certainly been able to capitalize on it nicely over the last few weeks, but as subscribers know, I've been warning that this thing's probably going to start slowing down. Going to start seeing technical divergence, and we should be getting that wave 2 pullback. So that's where we are at, and I think maybe it has started. I don't have strong enough evidence to say for sure, but I think there's a chance that we may have started that wave 2 pullback. We'll see. Again, below 87.40, I'm pretty certain that it has started. So, and that's where we're at. So again, what am I saying? Bottom line with Bitcoin, if you've enjoyed this run up, be a little cautious here. But be assured that as long as we're over 6,400, and especially if we remain over 7,055, this is using the BitMEX price here, the big run may happen. Now, the box is here. This is ideal. I'd at least like to see wave 2 hit 82.40, ideally, but we'll see if it pulls back that deep. Sometimes in these big runs, we get a much shallower pullback than our main run. This, I just moved between my micro and my primary analysis. This one actually shows the wave, the taller first of a third up in that 16,000 to 20,000 region. But again, it's actually possible that, and we're gonna have to watch on the site whether we're gonna take a break here and get another deep 2, or whether we're gonna run right through it. Both are actually reasonably probable from experience using Elliott wave theory. So I'll let everyone take a kind of a look at this, I guess, Tom, for a little bit. And maybe before I get to GBTC, we take a little bit of questions.
I think that'd be a great spot. So just we are getting
nicely.
Yeah, we are getting a question again. Just one last time, if you go, if someone wanted to maybe take a tranche of Bitcoin, you're saying in that blue box in the 70.55 to 80 was 82.37 level is where you're considering to be the next maybe best shot.
Yeah, I mean, I'm just going to put the caveat because we happen to have this webinar on the potential that this wave 2 has started, but we really don't have sufficient confirmation yet. I'm getting 8270 makes a really high probability. It may be that I have to adjust this box. I mean, that's Elliott wave is both static and living, meaning if you've been on the service for a long period of time, you can see how static my forecasts were. I was looking for 4,600 to 3,000. We came to 3,000. But in 2019, we saw a lot of extensions I didn't expect. Further, I also wanted to see this market bottom at 5,500, not 6,400. So it's both static and living. So it may be that we take a little extra high, I adjust the box, but irregardless, we have what looks like 5 waves complete. So we have to be a little bit cautious here. If you're honestly in this kind of market, if you are not long at all, you might consider a small position. The trading is a game of probabilities, so you may still want to have a small position if you have none. I'm still long a lot of my Bitcoin, but I trade in leverage. All my leverage is off the table here because it's too risky to have any leverage on. But when we get, I trade sort of long-term holding, and then I trade around my long-term positions with short-term positions, sometimes even shorting against myself, if you will. And right here, I'm not short. I have a little bit of short ether right now, but not much. And then I am going to be aggressively long leverage when my risk is small. Okay. So what am I saying? We don't know if the correction started. The box may adjust, but right now that's where it's at, as stated in the question. And at the same time, what we don't know in regards to how this will evolve is whether it goes shallow or deep. Does it go deep into the box? Does it go shallow in the box? Does it challenge the bottom of the box and then spike up and go? Or does it break 6410 and I'm completely wrong and we'll look for a setup lower? So that's where Elliott wave has to, because when we look at and the reason I say that is because if we look at this wave 2 and where we bottomed here, it's actually pretty shallow itself. So I have no problem with this market testing lower, but it just looks like it's done.
So for someone that's new to Elliott wave theory, is it a situation where as let's just assume that we now start to see a pullback from the region you're considering to be the potential top of 1, as that pullback starting to happen, does the pattern at which, are you tracking the pattern on the shorter term time frames to see is it playing ball for what you'd expect to be maybe the potential 2, or maybe can it start to give you insight to say, whoa, this could end up extending, or this could maybe be something a little bit different than I expected? Do you get some cues as the trading continues?
Yeah, exactly. So what we know about corrective waves is that C and A tend to show sort of a symmetry. So I basically will track all that symmetry live. So I'll when we were up at the top, it's like, okay, risk off, manage your risk here. But as we get down as a correction, we'll watch how the A's and the C's evolve. We'll get some B wave rallies in there too. We'll watch how they evolve, and we'll also look for technical. There's a whole. I mean, Avi did so much work on the technicals, but that show in indicators of the basic ones, RSI and MACD during certain wave patterns. So we use those as well. So there's lots and lots of inputs to sort of track that live, and that's the value of, like I do YouTube posts and I do Twitter posts, but that's the value of the service, is that I'm doing 30 analysis a day for scalpers in Bitcoin, and then I'm doing the nightly report where I say, okay, this is where we're at. This is what the short term is showing me. This correction is, this correction may be over, but if it does this, it's going to extend a little further. So we do that all as the correction evolves. And then all the targets will get kind of, this is the general framework that you're seeing here. This is the big zoomed out framework, but that framework is going to see some small adjustments as we have better targets for wave 1 and 2, meaning this area, and then this area. So these are all going to start to float a little bit as this evolves here, because there's a mathematical relationship between all of these patterns. I mean, what we do know is that there is a high tendency to follow some of these mathematical relationships that we follow between the waves. It's a range, but we use that all to sort of tie down our targets as we go.
Does the 2020 Bitcoin halving event have any effect or impact on the timing of your counts?
No, absolutely not. I'll say a couple things about that. One, I don't think you can, no one has showed me how they make forecasts off of halving. Is it bullish? Yeah, it sounds really bullish. Their supply is going to get cut. It makes sense, but there's no way for me to look at that generally and say, okay, well, therefore my price forecast should be this or that. No, I get it all from direct insight from price itself. So that's key. Number two, I think that sentiment-wise, it will not surprise me one day that we see halving and it's actually bearish. I know that I will be on top of that because of price action, but the market always expects halving to be bullish, and that makes sense because it's always been bullish, or at least we can say price has reacted to, it has been bullish during times of halving. But one day, because markets have a way of surprising the crowds, I think one day we'll see a bearish halving event. Honestly, I mean, it's just the way markets go. They fool the crowd. And everyone will be looking bullish. Right now happens to be that the halving crowd is looking bullish, and so am I. So but I get my insight directly off pricing. In fact, to be honest, I don't even really pay attention to halving that much.
So getting some questions just about, do you have any recommendations about where? So I'm assuming this is maybe some people just getting started into the crypto sphere, where they might go to trade cryptos.
I mean, I think if you're just more confident, I mean, we'll talk about GBTC in a bit, and if you're more confident with your brokerage account, get a position in GBTC. Again, that's not a recommendation. Do your own research, read about it before you do that, but consider it. And I'll talk about the ins and outs of that a little bit. Go to Grayscale Investments, their site, the ones that create the fund. It's a trust fund, not an ETF, but check it out. So you can start there. I think also look for, it may be until after this top happens, but which after 127, I'm looking at 3,000 to 1,600 is the next wave down, by the way. At least that's where I'm at now until something else shows. But it may happen at the top, but we're starting to see brokerages play with crypto within the brokerage account. TradeStation has a program now. I don't know where that, so you can try that. I'm not familiar with it. Other than that, especially in the US, we're getting to a point where it's highly regulated, as well as there's some really robust KYC behind it, know your customer policies to avoid money laundering, but also as a benefit, for security when your brokerage knows you in case there's a problem, meaning they have your ID and all of that, social security number, et cetera. There's a benefit to security. And so I've actually traded on a new options exchange called LedgerX. In fact, it's so high security, if you try to withdraw Bitcoin, they call you to match up addresses. So no Bitcoin's getting out of there without a phone call, which is very high security, a little extreme, but I certainly feel comfortable. I also trade on Kraken and good old Coinbase. I mean, Coinbase is proving to be a good spot. I think sometimes their customer service is a little bit slow. I think it's gotten better in the last year, but that's where I take my cash from my bank account to the fiat, to the coin world, the crypto world. I take it through Coinbase, usually through a couple other sources, and then send it I tend to do leverage trading nowadays on Kraken. I don't know if people know this, but there's a lot of leverage exchange outside the United States, but you're not legally supposed to use them. They won't enforce it in you, but they'll come after exchanges, and you can get a lockup of your assets if you use exchanges that are not legal for Americans. So Kraken, Coinbase. Kraken is Kraken. If you are familiar with options, though they're still a little illiquid, LedgerX.com. They're a fully regulated options exchange in the U.S.
That was perfect, because the other question was going to be about options on Bitcoin. So
yeah, I talk about my options trading. I opened up my LedgerX account Jan 1. I have had a very nice return there so far, a 25% return personally over the last month. I'm very happy with it. I had my first loss trade today, actually. I had to get out of a trade because I thought the top was happening. The problem is it's just illiquid. So for instance, I trade intrinsic value in the options. I don't trade a lot of gamma. because the premium, you may have to take a bad spread. It's very hard to trade there still. But if you understand what you're buying in options, if you have experience in options, I think it's great. I mean, it's better than leverage because you don't have to worry about margin calls. So I much prefer trading options over leverage personally, because you can. I mean, I use stops on all my trades and I'm very tight, but I still freak out because when I was learning how to trade, I got margin calls all the time. So the idea of being leveraged up to me is scary. I do take some leverage trades, and that's on Kraken. Kraken's legal leverage for Americans, but it's just a little bit hairy. Be careful.
Okay, I think
if you're not familiar with Bitcoin and how it moves, don't trade leverage until you're very familiar with it. That's another recommendation. Anyway, sorry, go ahead, Tom.
Good recommendation. So let's take that opportunity now to switch over to GBTC. If there were any questions I missed specifically about Bitcoin that Ryan didn't get to, please feel welcome to repost those. This isn't the end, so you're welcome to look at those again. I think some of the other questions are going to touch upon GBTC or are going to be more general, and I'll get to those at the end. So thank you everyone for your patience, and Ryan, thank you for kind of giving us that little respite there.
So let's talk about what GBTC is, just so people are really unfamiliar. In fact, when I give 3 or 4 trader talks at Trader Expo, and I'm surprised that's really a brokerage-based and futures-based retail audience. And I was surprised when I started talking about GBTC in those that people didn't know what it was. So let's give a little primer. So GBTC is not an ETF; it's a trust. Like a familiar trust would be CEF if you're in the mining, which is based in Canada, which holds gold and silver, versus GLD, which is a real ETF on gold. Okay, so this is basically, and one of the keys in terms of trading to a trust is that it tends to take on premium. A company managing an ETF by law has to keep the net asset value to the underlying fair. And so what folks don't understand about the SEC process of approving a lot of people think it's, they take a conspiracy bent, like SEC does not like Bitcoin and they're against an ETF. Actually, what they've been saying in all of the rulings is that they don't believe any Bitcoin company can make an ETF that has fair NAV pricing, net asset value pricing, because Bitcoin, what is it priced at? Every exchange has a slightly different quote. It's not regulated, so you don't have, and it's starting to get tighter. But you look at any exchange globally, from Japan to US to Korea you get some pretty wild variations in pricing. Even in the US, between Kraken and Coinbase, you will see a variation in the pricing slightly. So that's a problem with getting an ETF. But Grayscale Investments has got a really tight relationship with the SEC. In fact, they're one of the few OTC companies that actually report to the SEC. In fact, there's speculation that they'll be the first one to get an ETF through. I don't know how they will, but in the meantime, they have this trust which is widely accepted by the SEC. Note, it is traded as an OTC stock, meaning it's not a normal quote. It also doesn't have any after-hours trading. Those institutions have access to after-hours trading, but retailers don't. It's and then finally it has a premium over NAV. So I think last I checked, I believe it's 0.09 Bitcoin per share or something like that. And the last I checked, the premium, which is a few days ago, is 20%, meaning that you're paying 20% more for the Bitcoin held within. So when I first started trading GBTC, it was a problem because I think we had something like 75% or even 100% premium on certain days. And that meant that Bitcoin only had half, think about it, half the effective price than that wild swing in premium, which was really just the prerogative of the market to assign premium to it. If the market was bullish, it was putting premium on the shares, and if the market was feeling bad about Bitcoin, it might drain that premium out. So now the premium is closer to 20%. So now we have basically 4 times the impact of the price, or basically 3 out of 4 of the pricing impact comes from Bitcoin itself, which makes it a lot more manageable. So when I'm bullish on Bitcoin, I'm bullish on GBTC. And given that I see GBTC following Bitcoin closely now, I'm certainly bullish and buying it in my retirement account. So it's nice because it has that tax. If you buy it in your retirement account, you have the tax benefit. But now what I want to say real clearly with that is I do not create my charts off GBTC based on Bitcoin and then sort of reverse engineer. I track my own charts with my own Elliott wave based math, if you will, the Fibonacci approach that we use. And because it just doesn't work. In fact, we have strange days where Bitcoin's up and GBTC is going the opposite direction, and then vice versa. We see, in fact, while I have 5 waves up in Bitcoin, if you're visual, does this look like 5 waves up for you? That's 3. So its structure and pattern is quite different. However, what we do have is a nice five wave up here completed in 2019. Actually, I wanted to illustrate the differences. Bitcoin bottomed December 2018. GBTC didn't bottom until February 2019, so 2 months later. So it's based on Bitcoin, but only so much because of that premium. But if Bitcoin's really going up, what is it, over 10x in this next couple of years? If I really want to extend out my accounts for a couple of years, it's probably reasonable, maybe even this year. GBTC should follow in some regard. So what I'm looking for right now is GBTC to complete the 5-way pattern here. If you're really familiar with Elliott wave at all, it has ABCs in here because I'm tracking a diagonal right now. I also have a few other counts, all counts actually. This has more all counts than anything right now because it's kind of a mess. But by and large, as long as we hold that, it's a 790 low. I'm bullish on this, and we're doing a lot of not directed trades, but basically I'm doing trade entry suggestions, and we've had some nice ones already, even after this bottom. I think we had a 30% trade, a few 10s. I think we had 1 loss. Anyway, off the calls the trade calls that I suggested off the low so far. So we do a little bit of micro counting, a little bit of swing trading in this one as well on the chart, on the service. And I think that, if I'm not incorrect, Tom, we've had a lot of people come into the service just to trade this, folks that are more familiar with the brokerage account world. And then right now, the Elliott wave projection here with Bitcoin at 127K is 178. So that's a pretty incredible return. Here we are sitting at 10. And again, just like everything else, I reserve the right to change my mind. And right now, this is a projection as long as 790 holds. So 790 doesn't hold, it breaks, then this projection changes. But this is just like 6,400 and Bitcoin is key to its projection. This is also key to 178 being seen. Further, just as I said on Bitcoin, we'll see what happens in this 3rd wave. If it pans out, if it plays out, it may adjust even upward. It may have to, based on where the 3s and 4s all land as we run through this chart. So, and there's also, I should also say, there's 3 other trusts. I watch ETCG and ETHE, one based on Ether Classic, one based on Ether. Not very great charts yet. Highly inflated premium. ETCG, the coin itself is very bullish to me. So it may be that ETCG sort of wakes up and cleans up. I'm also very bullish on Ethereum right now. It has a very similar pattern to Bitcoin, and I'm watching that one, but it looks bearish short term again because the premium is probably still deflating in it, but there may be a trade coming up in it in the future that we'll call on the service. So yeah, so they have a few other, and they have a large cap. It's more of a diversified large cap trust as well that I haven't really tracked yet. It's too little early for that one. Just came out recently. So yeah, that's GBTC, and again, you can get this in your brokerage account. Just GBTC is the symbol, like any old stock symbol. You just know that you're trading on an OTC quote. It's an over-the-counter quote, not a standard stock quote. But it's pretty liquid now. It's actually getting a lot of interest, so it's more liquid than you would expect out of any OTC stock. Pretty highly traded. In fact, there was a recent public. There was a Schwab had pushed out. It was something like one of the top 6 holdings of Schwab retail clients, which is crazy. You of all the things they can own, like Amazon stock, Tesla stock, Apple stock, you name it, S&P 500, SPY, the ETF. It was this one was in the top, at least the top 10. I think it was actually top 6 or something like that. All right, so that's it for GBTC. I'm sure there's tons of questions, but it's a real basic pattern with some nuances that are different from Bitcoin, but basically the same exact 1-2 setup for this large 5-wave pattern pushing up into 178.
So with cryptocurrency with Bitcoin trading 24 hours. And obviously GBTC following more traditional market open, market close. Do you notice a lot of gapping
Yep.
or a lot of?
Yeah, I mean, same with the I don't know if people are aware, but there's Bitcoin futures on the Chicago Mercantile CME. Same thing. Both of these guys have gaps. Now the CME futures really follows the same price structure as Bitcoin because it really is tied to Bitcoin versus this being kind of a slave to the market premium, assigning premium to it or draining it out. But yeah, both of them have these crazy gaps. And a lot of people that are new to my service, who trade gaps in the indexes, ask me, you expect that gap to be filled and all of that sort of old approach. I don't mean old derogatory, but that's a very classic approach to trading indexes. You watch for gaps to close or gap and go setups and all of that. You just really can't treat that here because it's really a slave to Bitcoin, moving crazy on weekends and nights, for sure. The funny thing though is sometimes, again, like I've said, Bitcoin could fly overnight and then correct in the morning. And sometimes we've actually seen where GBTC front runned it, meaning started correcting in the day before, and then Bitcoin sort of caught up. So there's really funky things we noticed, more than just that, more than just gaps. We notice sometimes like GBTC may have a big run up in the end of closing stock market hours while Bitcoin is completely dead, and then we see Bitcoin take off overnight. So there's just weird relationships that we track really closely, but more than just looking for those types of interactions, just watching what price itself is doing on each individual chart is super important.
So for Bitcoin, how do you consider? Actually, before we jump back to Bitcoin, let's just confirm this. We have some other. In terms of the short term, is it correct that you're bullish on GBTC as long as we remain over a certain level? And they're asking if you could just confirm what that level was.
Yeah, so it's this low right here is the end of the well, so there's two things with Elliott wave. There's the beginning of the move up. So there's always the bottom, of course. If the bottom breaks, the projections change. That's basic almost any trading analysis. So 790 is that. I think I got this on the right low. Let me make sure it's right. It's 790, but basically this low that was struck in January. So that's sort of the confirmation level that the Elliott wave pattern is not playing out from here, because this is actually 50%. This wave 2 is only 50%. So there's lots more support below it for this setup to sort of reinvigorate. So I want to say that real clearly is that break of 790 does not change my bullish outlook. I think it's literally 495. However, short-term, immediate, meaning this big wave 3 has started. I need to have 790 to hold. Plus, if it breaks, 790 breaks, the forecast comes down with it because it's just mathematical. It's in relation to the 1 and the 2. So that's number one. But also, there's a closer key in support at $8.30. So what we learned is that if you get a real strong break of the 764 retrace, usually you also take out the beginning of the move. It's just probability. It's just if you track enough charts, you see that. So I don't stay in charts below 764. If I'll stop out below the 764, which is 830, and then if it does surprise me and sort of find life again, I'll look for another setup before I buy back in. Which so usually there's sort of a little loss and buy higher when that happens, but generally it's successful stop out when you break the 764 retrace. And again, right now that's that I'm using this first low here because it's more key than this one right now. Or sorry, this first high here is more key than this one right now in terms of the structure. And so 764 of that is 830. So those are the two levels to look for: 830 and 791.
And then if this pattern continues to progress as you have it laid out, then we're looking for a target for the initial wave 1 around the 20 region, just to confirm those prices.
Yeah, well, the problem is I see so many patterns here. 14 is a key and 20 is a key. I'm not, I recently did a report of the 3 alternate ways I see this structure, and again, not the structure that 2019 to 20, but just this structure right here. I did a long report recently for subscribers where I can make this out. We just got the move. We needed to take one of those scenarios off the table. So I'm in a process of elimination to get this down to the pattern, to one pattern, and we still have 2 So in those two patterns, 14 is still important, 20 is still important. So those are levels we're looking for. So there's a little bit of like feeling through what the right count is here based on the math and how the structure plays out. If we do get a move down to 830, then it hurts short term if you're long, but it actually drives some clarity in the structure. So honestly, I don't mind getting 830, and plus you get a nice little sale. I'm not sure we'll get it or not right now. So sorry to be they're just talking about, we're talking about the open-ended aspect of Elliott wave right now. There is often unclarity that we have to wait for, and that's one of those. Also, I want to say too, it's key is once we get 5, that stop of 830 is going to get moved up. So, if we're way up here, say 81, the stop will be somewhere else. It's not going to be way down at 830, meaning, so so we know when this third wave, for instance, fails by a higher stop level, and generally it's 50% of the progress of the third wave. So that's another thing I want to say about all of these, Bitcoin and everything. We move a dynamic stop system based on fibs, which we'll do as we go.
So this question's got 2 parts. We'll take it one with Bitcoin and one with GBTC. So given obviously the overnight constantly trading nature of Bitcoin and weekends, how do you handle maybe say stops or taking short-term, taking some off at short-term targets? Are there brokerage that allow you to put these levels in, or are you just exchanges that allow you to put those levels in, or are you just maybe setting up alerts and waking up and doing it? And then additionally, understanding that there's this constantly trading vehicle and GBTC's not, how do you weigh that into your decisions? So is it through maybe just position sizing, or how maybe?
Yeah, I'm very seasoned in it right now, right? So I've been trading since Bitcoin off and on since 2012, and got heavily into it, and also made it my career since 2017 and 18. One, don't touch the leverage if you're not familiar with Bitcoin itself. In fact, I would say the first time you ever touch leverage, well, one, I should just generally say don't, but if you are a leverage addict, which I confess I can be, take another account that is only a partial part of your, because when you first touch leverage in Bitcoin, the chances that you blow out that account is really, really high because of the overnight trade. So take a different account and maybe take like 10% of your Bitcoin holdings and give it a try first, and then stay that way. Don't ever leverage up all of your money into Bitcoin, because you may wake up one morning and have actually zero in the account, and I have done that in my early days. So we all have, I may be a professional trader now, but I've had my days, and I think one of the reasons I'm professional is because I had so many blow-ups enough to learn really hard what not to do. So just learn from my mistakes. But also I do have a mix of, I position very carefully, especially on leverage. I'm really comfortable with, so I do a mix of hard stops that I have on orders, like usually that would be Kraken now. I like Kraken's stop system a little bit better. It has profit taking as well, and I'm also a religious profit taker. When I hit my targets, I take some off. That puts me in a good spot for if I get stopped out on the other end. At least I made money. And in terms of whether I leave them on the exchange as stops or I just do a manual stop, depends actually, because so Kraken has a problem with slippage. So there are times where you can get hit on your stop and it's actually literally just a phantom bar. It happens less on Bitcoin and Ether than like the little altcoins, but that's a problem that you experience on Kraken. So you could put a stop and you realize that it's the only exchange that ever went there, and the actual global price would have never stopped you out. That's a real problem. So when I have a larger trades that are not leveraged, I don't actually mind having that. That may sound counter because it's a larger trade. Well, I don't want that large loss in a situation where when there's a big phantom bar, big phantom candle that's fake, so to speak, because of a liquidity issue. So, but I'm usually comfortable in expecting that not to get hit the next day or two. I just am very comfortable with the movement, but I don't put big leverage on and then have a mental stop only. So a lot of my leverage trades are really short term, and they have to have a stop in the exchange. But also my leverage trades nowadays are really small. So those are sort of like, that's me. I know I have subscribers that keep those automatic stops on. Some of it depends on who you are as a trader. I know when to look at a chart and go, I am wrong. I have to get out of this trade. I'm really disciplined about that. I've lost enough times in my life to know, and also have enough confidence now to know that my analysis is either right or wrong, and it's objective. So all of my trades are planned. So sometimes people need to have those stops on the exchange because they're just not disciplined. They just don't trust themselves to stop out of the trade. They don't expect themselves to pull the trigger when the trade is under pressure. I'm different. I'm really confident in knowing when something's not going my way and I get out. But that's hard learned lesson. That, you know, I've not lost enough money not being devoted to my discipline that I'm now very disciplined. So that's a kind of a loaded answer, but it really, the answer is it depends on a lot of those factors for me.
So if people are looking to maybe stick with, maybe say the best of breed cryptos, in your opinion, what coins right now are the ones, I don't want to say reliable, but are the ones that you maybe would have more confidence in terms of just their viability to continue for the foreseeable future?
Well, I mean, I've talked personally to a lot of hedge funds and listened to a lot of hedge fund talks and listened to a lot of the institutions that are trading liquidity provider. I think having an institution behind the trade is really important. Now, look, institutions are tricky because they definitely trick retailers and take advantage of them. However, you know when institutions are in the trade that it is long-term viable. What is that right now? 2, Bitcoin, Ethereum, and Ethereum only second. So I think any portfolio should be around Bitcoin simply because it's sustainable. I really, in general, so everyone made a lot of money in altcoins in 2017. I don't think that we will see that this year. I think we have some ones coming up. I'm bullish on EOS, tentatively on Litecoin. I turned to a Ripple bull recently when I've been a bear all through 2019. So there's some other options out there, but for me personally, I mostly trade Bitcoin and Ether, and I'm only interested in any of those other ones tangentially. Just part of it's liquidity. Like if you look at any of these charts, the altcoin charts, the liquidity is really poor, and a lot of the pumps that you get that fail, they simply pump because the book got thin and there's a little bit of interest and they shot up. And if you're great at taking advantage of that day in, day out, more power to you. But I think if you're an investor and you're a little slower and a lot less nimble, you really should be in liquidity and know where the big people are playing, because while they may take advantage of you on the trade, if you learn how to trade successfully, at least you know that the asset has sustainability. If institutions are interested in it, it's sustainable. It's going to be around for a while because they want it to be around for a while. They're not going to put their money into something that's garbage. So my caution is definitely trade Bitcoin, start there, build a portfolio around it. If you want to try some of the things speculatively, but I can tell you, Bitcoin has held my forecast largely like a dream. And a lot of my forecasts on the altcoins died partly because they just simply lost liquidity. And so support started failing, and I went from big famous one on Twitter. I was very bullish on Verge last year, and then it failed support, and I turned into a bear. And some people still remember when I was a bull. They go, "What happened? You're totally wrong." It's like, but you didn't listen to me when I changed into a bear, because that just happens, And so I think just word to the wise: don't try to get rich off altcoins in 2009, it's 2020 now, 2020, 2021, because I just don't think it's the year. Some will be great. But I think we're seeing a lot of the older ones fail. There's tons of graveyards of bad charts now, and we may see a few newcomers come on the scene. But it's best to have a skeptical eye, honestly.
And I think that might be a good spot for us to maybe visit next. And I know we're kind of coming up here on the hour, but before we went, I wanted to just take a step back because there were a couple more questions just about obviously everyone saw the long-term expectations in Bitcoin, but maybe we could take one more step back to Bitcoin and then just take one more look at the more immediate term. What are you looking in the short to intermediate term in Bitcoin?
Yeah, so I mean, right now I'm going to frame it as a question. I woke up this morning and I saw a little minor break that potentially indicates that this top is in. Again, it's not enough for me to be really certain but I'm at least I'm personally trading like it is, meaning I'm light on the long side right now. So I'm trading it like a top until it's not. We could definitely set up potentially for a run to 10-3, 10-5 comfortably. And in fact, I was looking for 10-3 until I saw the action that I saw last night, which is both a mix of potential completion as well as some technical indication that it's rolling over. So that's the question. And again, 87.40 would make me a lot more certain that we have topped. If we have topped this level, if this is the top for our wave one, this is the level that's very typical. Again, emphasize typical, because we can certainly see shallow. We can certainly see a poke through support, but as long as it holds the 6,400. But this is the area. So and basically, I like to. There's a video I have that I highly suggest anyone interested in Elliott Wave watching, which is called Using Elliott Wave. It's on I know we have it on the site, and I have it on my YouTube channel, which I'm easy to find. But I like to use this the symbol of a triangle, which is basically when trading Elliott Wave theory. When you kind of know your support level, the width of this triangle represents the position size. So when I get down on this level, I'll start to scale in a little bit larger, and then I want to have most of my position near the stop, because the stop is right below the box, a little bit below. I'll give it a room like 69.20. Now I tend to look at the action in there. If there's no technical divergence and no sign that the market can reverse, then I stop out. If there's a little bit of that showing, then I might give it a little bit of room. That's just my experience. But basically the width of the triangle is where the position. And if you have most of your risk near the stop, you really have a very lowest way of trading. The problem is, of course, you won't get the position you want necessarily if you don't go deep. So what happens is you get a 5-wave structure out of that support level. And when you have that, you get another, I'll do it a little sort of copy and paste, but so we'll get like another little triangle. So we'll get 5-wave response out of support, and then we'll have another support level that shows, and that'll also be our new stop on the trade. So that's basically the way I teach trading. And I draw. Sometimes I draw triangles on the site. Sometimes I just draw boxes. I mean, they're really one and the same. But this is what you want to do practically, tactically with Elliott Wave analysis, is use those support levels to start to enter the trade, and then keep your risk light until you're really close to the stop. Then you really have very measured risk, and the risk to reward is maximized if your risk is tiny and and the run rate is potentially very large. So a 70.54 to 82.37 if we have topped today, but we just don't know yet for sure.
That's fantastic. And so this type of charting that Ryan's doing here tonight with us with Bitcoin and GBTC, not only does he do these all day long, I think when he first got started, he said was a 30, 40 posts a day easily. And of course, it's covering not just these Bitcoin and Ethereum, but also he will look at tokens and post ICOs and other altcoins. So if there are other things that you're interested in, it's not just limited to this analysis. It does have a larger population of coins that he's covering. Additionally, and maybe Ryan, you could give a little bit more insight on this, but you welcome questions inside the service. So even if it's something you're maybe not closely following, maybe someone can get your opinion on it.
Yeah, I'll take. I mean, any coin request or even blockchain stock that's legitimately a blockchain stock, I will cover if a request. I mean, I think the only caveat to that is if some technology is able as a blockchain company, but it really doesn't have the P&L tied to blockchain. But like Hive mining and Hut mining, I cover all those. So I will, just ask away. I also am not shy about calling something crap. And at the same time, just because I care about people losing money, not losing money and making money, I care about that. I care about every subscriber. I actually use that language just so people will be really cautious. And so I've been known to call things crap or worse on the site, but that's not to offend, but it's just to warn. But also, I should say too that even though I'll take any requests, I stare at Ether and Bitcoin every day, all day long. My calls are better on those. So I definitely miss some trades in something that I don't personally trade, like especially these wild, sudden altcoin pumps. I would say, sometimes I see them, but there are a lot of people on Twitter that call these pumps, and I think it's because they must stare at, really micro cap, cryptos all day long. That's really not the way I trade. So I just want you guys to know that about me. I'm very much tied to Ether and Bitcoin, very close. And then occasionally you'll see me post trades. Like I've been posting Ripple trades lately because it finally turned bullish. EOS I actually watch pretty closely, and we've caught some nice swing trades on that. Ether, I think Ether Classic is one that moved suddenly that I just didn't catch, and I'm now adjusting to a bullish position on it. So
It's a good question that's coming up here. So in terms of an indication that maybe we haven't topped yet in 5 of 1, would it just be breaking out above the recent high, or is there another indication that we should be looking for to kind of give us an idea that we might still be extending higher?
well, I mean, there's things I'm looking at even in this little tiny, like literally, I mean, I have a trading view chart that I use more micro. So, the first warning is if we start to retrace 3764 of this, then I need to be on my toes. So we just put fibs here. I mean, to me, it's more than that. I mean, more than just levels. I mean, I'll be watching the quality of technicals, and I use some volume-based indicators, all sorts of things to be looking at that level. So that's enough of a warning. So we're not going to miss a whole lot. That said, it may just be simply an extension on 5. So if we're over 9491, at least I have to be on top of my game and say, well, are we going to extend again? It's reasonable, and it'll depend a lot on structure. I mean, if we pop through this box and we retrace correctively, and it's look like it's building and consolidating again, then we'll be ready for breakout. It may be a short-term trade. To me, when we're up here, kind of nosebleed of a 5-wave move, I need to treat trades like that far more short term. So there might be some people on the site that are less nimble, are going to have to decide whether they ride that extension, put their position back on. I mean, everyone has to learn their own trade plan given this analysis. So I really emphasize self-learning. But for me, if I saw this over 941, I'd go back to short-term scalping this upward and expecting at least probably 10.3 is most likely. I'll have to look at all the other inputs because changed. This whole thing's changed in the last few days, but 10.3 to 10.5 would be what I'd expect to see out of this if we did that.
Especially for people that are new to Elliott wave theory. So a lot of this terminology, even as you're writing and displaying it in your charts, I hope people are finding them very clear to read with your target boxes in your triangle examples. But sometimes I've heard from people that say, it's just a lot easier to hear someone discuss something, and then it's maybe easier for me to follow along with the charts thereafter. So do you do presentations like this with your members in the crypto service?
Yeah, every Saturday morning we do a webinar. We ended up on Saturday because you guys have a small monitor here, but I have a 34-inch monitor. No one can see my webinars. So we did, because I use big trading monitors during stock market hours. So anyway, so Saturday morning we started. Everyone pulls up their coffee. Not everyone shows up, so we record it. So it'll be on the site like 2 hours after the webinar on Saturdays, so people aren't missing much. We do requests the day before, so I have all of these requests lines up. So I'll always cover Bitcoin, Ether, GBTC, and then the Ether Bitcoin pair. And then those are the 4 standards every Saturday morning. I run through it for micro. If we need to zoom out and get a roadmap look, we do that just to remind everyone. And then after that, we take all the requests. So a lot of people, love some of these little micro caps, and they can request them during the week. They can also request me to talk about them on a Saturday morning, and I do that. So we usually run about an hour and a half for those webinars. So some people just want to get the Bitcoin stuff and they pop off, and some people really hang out for the whole hour and a half. I don't know. Imagine them over there with their coffee, watching Big Gab. So, and they can ask questions live as well through text.
Well, Ryan, I really appreciate you taking the time this evening to share with us a little bit about what you're seeing going forward, not only with Bitcoin, but also GBTC. If people want, I know we couldn't get to all the questions. I do apologize for that, but especially if you had interest in other coins, as you heard, Ryan's covering a much larger population of coins just naturally on the site, as well as during the weekend webinar that he outlined and posts in the room. You're welcome to ask questions, and I'll be more than happy to either both answer Elliott Wave questions on his count and what he's seeing, as well as we'll take a look at other coins to provide you his assessment of what he sees in them. So Ryan, again, thank you so much for your time this evening. And we hope everyone, if you haven't yet, stops into ElliottWaveTrader.net. You can take a 15-day free trial. If you've never tried the service before, you can take a 15-day free trial to the cryptocurrency trading service. And if you have tried it before, but it's been a while, you're likely eligible for another trial. So please log in, and you can also contact us if you're not sure, and we'll be happy to help you get started. So Ryan, I give you the floor for any final parting shots.
Yeah, I mean, I think, I would say just in conclusion, this is a huge opportunity, but I also believe that the crypto retailers out there really burned their britches in 2017, chasing something and never expecting this market to turn bearish. Markets are volatile. They go up and down. The question is, what do you look for something turning on you? And I think learning that skill, I mean, even if, I look to teach those skills to other people as, I continue to learn myself, but have at least learned well enough to react to markets versus presuming what they're going to do. And I think that's what we teach really clearly on Elliott Wave. And so I would say just be careful out there in Twitter space where you really find a bunch of either perma bulls or perma bears, and that's really not very helpful. It's not to say not other services are not helpful, but we remain very flexible to the market. Yes, we have a certain technique and a lot of other techniques layered on top of this Elliott Wave analysis to get on the right side of the market. And at the same time, we spend a lot of time trading how you manage that risk. So this bull market opportunity is not going to be taken by people on Elliott Wave Trader with sort of unmeasured risk. Okay, I say it's a huge opportunity, but you still have to be careful. I can turn out to be wrong tomorrow, but I'll know where I'm wrong, and I will lick my wounds and move on, potentially even on the short side of the trade if that were to happen. But right now, it looks to me like we have a huge opportunity, and I think there's a, I don't want to say that's a mistake not to take it, but a lot of folks missed the opportunity in 2017. Here we are in front of it. I would just say if you're going to take it with really reasonable measured risk, and what that is exactly for you is unique to you. I can't set that for you, but I can at least give a few lessons on how to do it and talk about how I'm doing it.